as well and find out what is it that we should be focusing in on when it comes to the India markets. Sandip, hi, morning. It's already been a 12% spike that one has seen in crude in just the last 1 week alone. Do you think the markets have factored that in? Are we in for a rebound today, or do you think this is going to be an elongated process? What is going on in West Asia and how crude is likely to impact here on?
Well, on the ground, the market reactions, both from the Israeli markets as well as Asian markets today, reflect that people are taking this in their stride. We need to be somewhat wary because the the conflict has started just 3-4 days back, and it could potentially last for longer. And the actual repercussions will also need to be seen on the ground over the next 1 week. So the best guess could be that it could prolong to around 10 days, and to that extent, it could create more volatility. Now, directionally, as far as macros go, as we have been discussing in the past, India is pretty well placed on most parameters. The crude might have spiked 10%, but then it spiked 10-12%, but it spiked from extremely depressed levels, like it had been continuously falling for months. And to that extent, the $72-$73 barrel rate is not really either inflation creating or disruptive. But if it goes to 85-90 because of whatever reason, then the impact could be there. So making estimates on how this crude spike will affect Indian inflation, CAD, etc., just on a few days movement, I think that makes little sense. So overall, I would think that the market reactions show that the markets believe at this stage that the impact will be limited. It could be limited, it could have some more impact, but I don't think it will have a lasting impact. So as an investment strategy, any corrections are only buying opportunities.
Sure. But Sandeep, if it spikes all the way to 85, then obviously we're likely to feel the heat, right?
That will only happen if the Strait of Hormuz gets blocked. Otherwise, globally, oil is very well supplied at this stage, and there is no real shortage. So the major spikes would typically happen if there is a real shortage, and on top of that, you get disruptions. So I think speculating if it will go to 85, 90, or after, if this entire conflict dies down in 10 days, whether it will fall back to 60, we don't really know. So I think we will take a better bet or evaluate it further, maybe after a week.
What's the chart reading though? Is there indication that the spike up is going to persist in crude?
It should persist for some more time, because it's not as if the crude index is topped out. It's neither as if, so there was, I think on Friday there was a point when the index was overbought, but then I think we retraced from the intraday highs on Friday for both Brent as well as WTI for the crude oil. So I think that's where I would believe that maybe there could be a chance that you might see these the asset class coming back into a retest of at least its Friday's major high, and that itself could be a jump of another 5 to 7%. So it still doesn't look like that we have got into that topping out formation for the crude oil prices. Now the only question over here is that whether crude oil sustains this kind of a steep up move, because over the last I think 2 months or so we've seen crude oil prices rising from sub 60 levels or 60 thereabouts to now on the verge of breaking that 80 plus mark, sustaining above those levels. So which means that this has been a steep rise for the crude oil prices over the last 1 to 2 months. The only question is that whether it can sustain or not. As of now, the indicators are not overbought, but we may need to see over the next couple of days if there is a chance that the indicators come into an overbought territory.
Okay, so that's Kunal's take on where crude prices could be heading on the charts at least. We have Chandan also joining us this morning. Chandan Taparia joining us. Chandan, hi, morning, and thanks so much for joining us. Give us your sense of where you're seeing the market texture today over the course of week, given the kind of news flow and escalation in the Western Asian region that we've seen over the course of the weekend. Where are you seeing the benchmarks as well as the broader markets headed?
Good morning. Thanks for having me. So, market got stuck in a range from last 25 trading session, where the multiple supports are visible at 24,442. But at the same time, we have seen sustained supply near 25,000, 25,200 level. On last trading session, it opened negative, but managed to hold the same support zone near 24,442 and moved higher. So, I believe some sort of consolidation could be there. However, the global market might give the capped upside, but domestic trigger could give the sustained buying interest at lower level. So I believe we have to play the broader range between 24,442 to 25,000 as of now. Talking about Bank Nifty index, that has been making lower top, lower bottom from last 4-5 days. But again, the good part is it managed to hold 55,000 added to 55,500. So I believe 55,000 could act as an immediate support. So both the indices are likely to see the range bound bias with key multiple support at lower zone.
Right. Okay. So Sandeep, you made a valid point that there, if there are corrections in the market, they should be bought into. But question being, what is it that you would recommend buying right now?
So I think it will be more of domestic-oriented sectors like financial, banks, NBFCs, industrials, which could include capital good companies, infrastructure companies, or on a reasonable correction, even defense companies, because they have not really corrected. And this conflict is also only creating a upside bias for those stocks. So then at this point of time, tough to find value, but eventually we could. And so I think these would broadly be sectors. And then if at all there is a broader sell-off, then we could find opportunities in other sectors also.
All right, but Sandeep, also help us with your take on Sun Pharma, because though our technical experts are liking pharma space for today, but specifically Sun Pharma is in the news flow for not a positive reason, as US FDA has once again issued a Form 483 to one of their key facilities, that is Halol, with 8 observations. This number is looking quite big as of now, though we are not aware of the kind of observations that US FDA has come out with. But this particular facility has been in the news flow and has been under the scanner of US FDA for almost a decade now, with no significant respite coming in. What is your take on that, Sandeep?
So Sun Pharma is a stock we held for a very long time, but we have now exited last month because of the company's increased expenditure on launching some products, etc., and some slowdown in some key products, which we think could slow down earnings growth for the next 12 to 15 months. Now, this Halol project is very strange actually, because they've been trying to resolve it for so long and it keeps on coming up under the scanner. So I'm not really sure what and why it happens, because all these large companies have such key people to look at these aspects, and they should actually not be failing any of the FDA inspections, but they regularly keep on failing. So very tough to say, but it is a key facility, so I think for them, so there will be some impact.
And we're still to see the nature of these observations. Yes, there are 8. We don't have details beyond that. But Vedanta, that's going to be on focus today, because of its board meet, which is slated for 18th. It's going to be considering perhaps its first interim dividend for FY26 after a series of many earlier. Ashesha is here to tell us what else to expect, and of course the dividend history as well. What is it hinting at as to what could be the payout for this financial year? Ashesha?
Well, yes, Vedanta will be in focus today because they will be considering first interim dividend for FY26 in the Board of Directors meeting that is scheduled to happen on the 18th of June. Now, remember, although this is the first dividend for this fiscal, Vedanta has a strong dividend payout history. In FY25, they paid a total dividend of 43.5 rupees per share. In FY24, 40.5 rupees per share, and about 101.8 rupees per share in the year prior. Remember, Hindustan Zinc last week declared a dividend of 10 rupees per share, which translates to a total of about 4,225 crores. And Vedanta
Vedanta owns about 63.4% stake in the company, which means by virtue of 10 rupees per share dividend that Hindustan Zinc announced last week, Vedanta will get about 2,660 odd crores, excluding tax implications, if any. Now, if Vedanta goes ahead and distributes this full amount as dividend, remember Vedanta Resources owns about 56.4% stake in the company, which means Vedanta Resources will get about 1,500 odd crores, and shareholders of Vedanta will get a bare minimum of 8 rupees per share. So that's the kind of dividend expectation the street is likely to have from the announcement that is likely to come on the 8th of June. Now, there are several triggers for Vedanta Limited. One, of course, is demerger of its companies into 4 companies, which is likely to happen in the next few quarters, and the company has also announced a slew of capex plans across its divisions, be it aluminium, steel or several other segments. So for now, Vedanta will be in focus on account of this dividend announcement in the board of directors meeting that is scheduled to happen on the 8th of June.
Okay, Shesha, thanks so much for taking us through that. Vedanta board to meet on the 18th of this month to mull its first interim dividend for this financial year is what we're understanding right now. But Kunal, what are you making of Vedanta on the charts? Last 1 year, the stock has not done all that much. Last 6 months, we've seen a dip. But recently, we've seen some improvement coming in the chart of this stock. Do you believe that's sustainable?
It's sustainable, but it's not exciting as a chart for Vedanta. There was a point where Vedanta was one of the better performing stocks. I remember, I think in Feb 2022 or the subsequent months after that, when the Russia-Ukraine crisis actually took off, that was the point when the stock in the next 2-3 months fell by 50% from 400 to 220 thereabouts. And then subsequently post that, the stock saw V-shaped recovery from 220. The stock at one point jumped up to 500 plus as well. But the fact is that the stock has been unable to surpass those levels of 500 thereafter. We've actually seen the stock being extremely volatile. So those true metal counters which are extremely volatile, very prone to news flows and the trends not being sustainable. That's the concern with the charts like Vedanta. As compared to this, if I look at say the charts for Tata Steel, SAIL, they are far more reliable and far more consistent in terms of the price pattern. So Vedanta can rally if the entire metal counters go into a breakout mode. But as of now, we are seeing just about a very fragmented move towards many of the individual metal counters and not a strong cohesive move across the patch. So that's why I would believe Vedanta can also try and just about amble into this range of 450 to 485, 490 thereabouts.
Okay, so that's on Vedanta. But this morning, we also have a note coming in on HDFC Life by Antique, wherein they're positive on the stock. And this is on the back of the management meet that the company had recently, wherein they also believe that headwinds are behind them and Q1 FY26 seems to be shaping up better. Chandan, what are you making of the chart of HDFC Life? And if you have to place your bets within the insurance space, would this be the stock?
Yeah, so SDFC Life has seen decent recovery in this year by more than 22%. And before that, it was just consolidating in last 3-4 years. However, in last 3 weeks, we have seen a corrective move, but major trend is positive and the stock is holding well above its rising support trend line with the hold of key moving averages. So I believe positive bias could be seen in the counter with support of 734. I believe this stock has potential to again rally towards 775 to 780 marks. Apart from SBI Life, I believe SBI Life, apart from SDFC Life, SBI Life could be the other name. Just a couple of days back, it was giving the breakout, but due to the market profit booking, it drifted lower. So buy and decline could continue with support of 1720. SBI Life can head towards 1820 kind of level. So SDFC Life and SBI Life both could be on radar.
All right, so that's about the life insurance counters. But yes, all eyes will be on HDFC Life on the back of the Antique note. Let's go across to Varun for more details on what were the key takeaways from the management meet and what is the target price coming in from Antique as well. Varun?
Definitely. So there was a management meet with HDFC Life and Antique has come out with a note on the same. They have a buy call on the stock with a price target of 860 rupees. Now they say that the regulatory concerns and the competitive pressure, they seem to be receding, and management reiterated their aspirations to grow APE better than the industry and actually double APE every 4 to 4.5 years. Now they say that the Q1 of FY26 is actually better than what they were actually estimating, with the April and May posting the overall retail APE growth of around 10% and the overall APE growth of around 14.4%. Also, the management is focusing on driving higher absolute VNB growth rather than margin. In fact, they say because of the favorable product mix and also overall the growth that the company is delivering, the overall VNB margin would be better, but that would be actually reinvested into distribution and technology, and hence the VNB margins would be range bound, but the overall VNB growth would be better. Also, they say that the agency and broker channel, they will drive the overall growth for the company, and the overall bank are to focus on the profitability. They expect 16 to 17% CAGR growth in APE and VNB over FY25 and 27, and hence they have a buy call on the stock with a price target of 860 rupees.
Okay, that's that on HDFC Life. Sandip, you're not a fan of insurance plays, are you?
Not so much, because the performance of these companies has been very volatile, and the growth which was expected out of most of these companies has not actually played out, both in terms of the parameters which most analysts measure to ascribe value, as well as the profitability growth. So I think these have been, so insurance has been a sector which was supposed to be sunrise and supposed to do very well, but the delivery is not as great. So typically, I'm not looking at this sector at this point of time.
All right, don't like the sector overall at this point in time. But Sandeep, also help us with your take on Bata India, because the stock has been hammered in the trade for quite some time now, and especially post the earnings, which was indeed a dismal set. And in the latest, some media reports suggest that CEO Sandip Kataria resigns after 5 years, so the official communication is still awaited. But just on this news flow, if you have any take, and also on the valuations, because the stock is already near to its 52-week low, give us some sense that how do you see Bata India?
First of all, the global CEO has resigned. The India CEO has not resigned. So I think that's something we need to be cognizant of. So there is no direct impact on Indian operations at this point of time. Secondly, as far as performance goes, the performance has been significantly languishing. The entire footwear segment has been going through a deep slowdown for the last 3 years, which is reflected not only in the performance of Bata, but other companies which are listed on the footwear space. And there is a belief that many D2C brands, etc., are taking away market share. That's why these companies are not growing. But if we track the raw material suppliers to these companies also, that also reflects that the slowdown is for real. This is also in a way reflective of what's happening in the overall consumer sector, but on the footwear side, it's been more drastic. There should be some consumer revival this year because of lower inflation, lower interest rates, lower tax rates, etc. And how that percolates down to the overall consumer sector and the footwear sector will determine how the stock will go. You rightly said that it's near 52-week lows, so most of the negatives seem to be in the price. But whether volume growth and value growth will come back, that will determine how the stock will do. Otherwise, it will continue to be in a range.
Okay, that's the take coming in on Bata. Asian Paints, by the way, just had another sizable block, I think 80 lakh shares or something. And just last week, you had Reliance as well announcing the sale of that 35 million shares in Asian Paints. That equates to about almost $900 million of cash added to their kitty. Now, there is speculation in the market whether this is going to actually lead to the fourth monetization cycle on Reliance, and where is it that they're going to spend this money? Sandeep, what is your take on whether now Reliance can finally be the counter wherein you can see some big announcements coming in terms of where they will deploy this 2,200 odd crore rupees from the stake sale of Asian Paints pouring in?
I think this sale also is likely to be that of Reliance, which was left off last week. Now they don't get 2,200 crores; they get overall, I think, around 10,000 odd crores, and they have huge debt, so they can just use it to repay the debt. And in terms of news flow, we don't really need more news flow coming out of Reliance. We actually need them to deliver on the new investments and profitability from those investments and generate some cash flows. So if they do that, then we will see another re-rating cycle. In any case, the stock has done well lately and should do well because we should see a good earnings cycle over the next 2 years. How much the new ventures will deliver in terms of profitability will determine how much better the stock can do.
I stand corrected. It's actually 2,200 rupees per share. That was the selling price. And yes, it's a good sizable $900 million added to the cash kitty after this stake sale in Asian Paints. But Kunal, what's the chart reading on it? On Reliance Industries right now? Do you think it's finally going to, begin participating more aggressively in the market move?
It should do it. So I think it started to show those signs initially from 1150 mark towards 1400, 1440 levels for Reliance Industries. It's been a fantastic rally, almost like I think in a matter of 3 weeks or 4 weeks, as the stock has managed to recover 300 points, 300 to 350 plus points. For Reliance Industries, and that's a very strong kind of an up move for a large cap, heavy weighted stock, the Nifty 50 name for itself. And now I think at current levels of 1400 plus minus say 50 points, 70 points for Reliance Industries, the stock is just about going through a time-wise consolidation. And we've seen time and again that whenever the stock gets into a time consolidation at the lower end of the price, which is closer to this 1400 mark, the risk reward becomes extremely lucrative and attractive for traders to try and build positions over here, because then it becomes just about a matter of time that the stock comes back into a breakout mode. So I would believe closer to this 1400 mark, Reliance could be a very good risk reward buy.
Okay, good risk reward buy on Reliance is the view coming in from Kunal. But Chandan, I want to come to you and talk to you about the entire real estate space. After the rate cut that was delivered by the RBI recently, we also have individual banks that are now cutting home loan rates. So largely positive for real estate. Today we also have news on Godrej Properties. Tell us where you see Nifty Realty headed, because it's seen quite the run up recently while the other sectors have not been doing all that well. So what's your view on Nifty Realty and where would you be placing your bets in that sector?
Yeah, so Nifty Realty has seen a decent run up in last 4-5 weeks, really do well by more than 15-20% from lower levels. And the stance from the RBI governor was quite positive for the sector. So to comment first, I'll focus on the Oberoi Realty. This stock has given a consolidation breakout from the bottom on the weekly chart couple of days back, and after that the trend is intact. It has seen a corrective move in last 3-4 days due to the market weakness, but major trend is intact on the short term point of view. So I believe with support of 1865, it can head towards 1960 kind of level. Godrej Property also looks good. Major trend is turning upwards. It has retested a key support zone. So I believe with support of 2350, one can look for an upside target towards 2500. So both the counter or most of the real estate is giving the buy on decline stance in the market scenario.
Sandeep, you had a knee-jerk reaction, I guess, or call it the overall market weakness on Friday when Interglobe Aviation fell about 5% at the session lows, recovered a little bit, was still down about 3.5% on lows. Perhaps a reaction to the very unfortunate Air India incident. But do you sense, A, that there could be a further decline in the stock? And if there should be a further decline, should it be bought?
In the near term, there is a possibility there could be a further decline because some of the Western aircraft routes remain disruptive, so that could impact some aviation traffic. some aviation traffic from international passengers could also get disrupted because of the various conflicts which are going on. But it's a very strong company with a base which is unlikely to be disruptive. So I think such corrections will only give opportunities to long-term investors to buy. The extent of the correction and how long it lasts will depend on how long the entire conflict, etc. lasts. But overall, I think in next 8-10 days, we should see some settling down, and to that extent, give opportunities in interglobe aviation also.
All right, so let's watch out for Interglobe Aviation. But with this, Sandeep, we'll let you go on that note. Thank you so much for taking the time out and speaking with us. So we also have the first rates in the pre-open session, and for now it's a gap down. What the pre-open rate are indicating almost a flat start for the Nifty 50 near about that 24,700 mark. We'll let those rates settle in for a bit. But yes, all eyes will be on Bajaj Finance as well, as the shares of the company will trade ex bonus and ex stock split from today. So let's watch out for that counter as well. But with this, let's also get you some of the mid-cap bets from both of our experts then. And Chandan, you go first. Tell us, within the mid-cap basket, which is the stock making up to your list?
So I selected to be positive on the selective IT name. Even if market corrects or consolidate, IT counter could see some buying interest. So Tech Mahindra is the name where I suggest to go long with support of 1625. And as per the positive price pattern similar to cup and handle on the weekly and the daily chart, expecting it to head towards 1720 to 1740 levels.
Kunal, what about you? Where are you placing your bets amid the mid-cap basket?
So I'll go with the buy on Oil India, a stock which was in the thick of news flow as well as a strong price uptrend for good part of the previous week. The stock closing almost at its weekly highs above that 470 plus mark. So would look out for 490 as a target for Oil India, and stop loss could be kept at 468.
All right, so those are the mid-cap bets coming in from both of our experts. All eyes on that. But let's also tell you what's really happening apart from the world of equities.